Welcome back to a new video, everyone, and today's video is going to be about some biases actually stopping you from making money in the stock market. The first one is herding. Herding is literally stopping most people from making money in the stock market. Let me explain. Herding is when investors, you, choose to follow what other people are doing instead of using your own information. And that's because you're either afraid or you're just deciding to go with the crowd. During C20, most people became day traders overnight, but more times than not, people just basically follow what people are doing online. And if someone in the Wall Street best just said, hey, we're going long Tesla, everyone went long Tesla, and basically people were not doing any research themselves. They were basically just following the crowd. And also because now investing on the Trading 212 app, pre-trade app, and most apps, you can basically see what other people are investing in, and now people are more likely to follow what the professionals are saying. On Trading 212, you can literally copy someone's portfolio like stock by stock, which I think is not a good idea. You should do your own research, come with a conclusion yourself, get some conviction in what you want to invest in, and go for it rather than trying to invest what other people are investing. Most people during C20 put all their money in the ARK funds because everyone was doing that. Like literally, not just retail investors, institutional investors were actually doing the same thing. And now the ARK funds are more or less way below their 2020 highs. And that just goes to show if you follow the herd, more times than not, you might get left behind. The next bias I actually talk about is familiarity and home bias. Familiarity bias is a tendency to make irrational investment decisions because you're actually investing in companies actually headquartered in the same home country of the investor, which leads to a very undiversified portfolio. And more times than not, for example, if you're an American investor, you tend to only hold American stocks because you have that home bias. There's no need in your mind to look at what stocks are there in Saudi Arabia, what stocks are there in China. Most people honestly tend to only hold stocks from the West. It's just as of recent now that a lot of emerging market ETFs are out, but more times than not, those ETFs only form probably 2% or 1% of someone's portfolio. There's always a bias to hold stocks that are just in the US because that's what we know. And more times than not, some of the reasons why people tend to only hold stocks in their home country is to avoid exchange rate risk, taxation, and also due to accounting standards. The next bias I'll talk about is overconfidence. Overconfidence can really kill, which is what my Nigerian dad would say. People tend to attribute their past good performance to their own skill rather than luck, while at the same time they will attribute their past poor performance to bad luck. This leads to people overestimating their own trading skills and they become overconfident following a good performance. In C20 again, when everyone invested in Tesla stock, in the ARK funds, and everyone's money was literally going to the moon, everyone was like, you know what, I'm the best retail trader ever, I know how to invest. And more times than not, these people can actually not even honestly analyze an income statement and balance sheet. But research also backs up the fact that overconfident investors tend to actually trade on their false beliefs of their own skills rather than actual information in front of them. And while men and women exhibit overconfidence, men tend to be more overconfident than women, and this actually reduces the returns of men, which is a big difference between the two genders. And in fact, this is more exacerbated between single men and single women. The next bias I'll talk about is regret aversion, and in layman's terms, this is FOMO, fear of missing out. My friends watching this, all of you always have FOMO, but I get why. Fear of regret may drive investors to engage in either risk-seeking or risk-averse behavior. For example, if your friend tells you to buy Microsoft stock and in the next 6 months, Microsoft stock actually goes down by like 100%, next time when you want to invest, you're going to do your own due diligence because you want to avoid that regret in the future. However, if that same friend told you to invest in Tesla stock and that went to the moon and increased by 300%, in the future, you're not going to literally do any analysis if your friend tells you to invest in another stock because you want to avoid the regret of not achieving great returns, which is literally FOMO. Most people have a large fear of missing out because no one wants to be that person where there's opportunity to earn 100% return and they didn't. So more times than not, people just invest in whatever their friends say, and it's sort of related to herding, but people are doing herding because of the regret aversion and because of FOMO. Now the last bias I actually talk about is confirmation bias. People tend to be drawn to information that actually confirms their pre-existing beliefs. You might have a belief that the market is going to move a certain way and actually look for information that actually supports your belief while ignoring the 10 other signs that tells you do not buy this stock because nothing else confirms that. But because you have a confirmation bias, this confirmation bias acts as a source of overconfidence and actually explains why most bulls tend to remain bullish and most bears tend to remain bearish regardless of the market conditions. Thanks for watching that video, guys. Like, comment, subscribe. Please share the video and honestly drop a comment and let me know what you want to see see you in the next video. When we talk about hedge funds, private equity, I tend to do a follow-up to this video and actually explain a bit more biases if this does well. So please like the video and see you in the next one.